Why is the market so wary of the dollar? Why is the market, as Jane said, so reluctant to buy it?
I think there are two things. I mean, the first thing is, it's reached in real terms its highest level since 1985, and it's had its biggest rally since the 1980-85 one, which not many people watched who are still around. So it's really expensive. It's like buying, I don't know, football players for 200 million quid each or whatever it is. So I think it's, somewhere in this is inevitable. The other thing about this cycle that I think is I've never seen a cycle where currencies have tracked short-term interest rate moves so doggedly. It's kind of, FX is supposed to be much more sort of varied and interesting than that. But on that basis, the market's now sort of backed off from some of the rate cuts. If the market thinks the Fed's not going to cut rates, the dollar's going to go to the moon. If the market
what does the moon look like?
The moon looks like 1985 again. It looks like, euro-dollar going back to test the lows, which are really, really, really strong dollar levels. I mean, dollar-yen breaking out to 160. In that world where the US economy doesn't have a soft landing or a landing or any kind of landing, and the Fed's next move, goodness knows, could be a hike, which seems a very unlikely world. But we've made a big jump from 6 rate cuts to 3 rate cuts so far this year. So that's the game. And why reluctance? Because I don't particularly want to turn around and say, hey, look, it wasn't 6 rate cuts, it's 3. I mean, maybe none, I can say happily. But wow, really? As a sort of, I believe this? So even last week, if you like, the retail sales numbers took quite a lot of the sort of tension out of the voice, thinking because they've been so strong, the numbers in the US. But I think that's it. To the starting piece. The reluctance, as Jane Foley put it, is down to this is one expensive thing, and I also think you have to look at the last 4 months together. We had an extraordinary November, December for the euro, or weak dollar weakness. January, February have been exactly the opposite. We're not back where we started yet, but then we're not at the end of the February yet. But if you take the 4 months together, you probably get a better picture of what's really going on.
Well, in the 4 months, you basically get net-net. I mean, that's kind of what's happening. You're saying that they're tracking interest rates. What should they be tracking instead?
Everything. That's the whole point of foreign exchange. But I mean,
what are they missing? What should be driving it?
OK, so growth should matter as much as interest rates. So, for example, the US economy's outperformance is stellar. So the question really here is this growth sustainable? Does the inability to land mean that the Fed's going to have to put the brakes on, or is it going to turn into a recession? If you sit there and think that, for example, the Fed's going to cut rates before the ECB, which is where we started the year, and the ECB is, in typical ECB fashion, going to focus principally on getting inflation under control and will be late, then the euro gets some support from that. Push back against that and say, all I care about are interest rates, then fine. But the growth story would say the ECB should have cut rates yesterday.
But if the markets are pricing in this idea that ultimately rate cuts are going to come, it's an inevitability. You're seeing that in the Fed swaps market. You are not seeing it in nominal yields. Why is buying the dollar not a no-brainer here? Because
if I'm turning around looking at the US saying the Fed's going to cut interest rates, the fiscal position is ultimately going to prove to be unsustainable, as is the balance of payments position really that comes with it, that the US has borrowed an enormous amount of growth from the future with an extraordinary fiscal policy that may not survive the next electoral cycle, for want of another way to put it, and then what? It's going to be a country with, low real interest rates deliberately coming back again, and we'll shift the balance, and the dollar will look as overvalued as it did. And then in 1986, it just went down all year, and so that could be the outcome that comes from that. So I think it only goes up on interest rate differentials at this point, and I can see the obvious way that could happen. And I haven't got to the point where that's going to turn into a forecast yet. I'm just staring at it going, wow, with everybody else.